So this year marks the 5th edition of my tax relief strategy video series since 2021. This is a video where I share throughout this year what are my tax reliefs that is calculated and what have I done for the year so that my viewers and audiences can also consider for their own within this less than 1 month time frame what can they do to reduce their taxable income. And before I start the video, I just want to highlight this very important fact because the personal income tax relief has a maximum cap of $80,000 and that is including the CPF relief. So there's really no point to over optimize your tax reliefs beyond a certain level, and you have to include your own CPF mandatory contributions as well. So if you have further questions on tax, then welcome to join us at over 22,000 members in the Honey Money SG Telegram. And as a usual tradition, I will start with the non-CPF tax reliefs, followed by the CPF tax reliefs. Then I will do a total summation of all the reliefs together. And yes, you can then follow my examples or you can work out your own numbers so that it fits your own tax strategy. Starting with the first non-CPF tax relief, and that is the earned income relief. For those of you who are below 55 years old, that will be $1,000. Okay, this one is a standard across the board. And if you are below 55 as a person with disability, it will be $4,000 of earned income relief. If this is the first year that you qualify for this, you will need to apply for it. And then in subsequent years, it will be automatically applied for eligible individuals. So earned income relief is very clear cut. There isn't much ambiguity about it. Okay, you just qualify or you don't qualify. But for those employees above age 55, you will have a separate number. So best refer to the IRAS website. Moving on to my second tax relief, that is the NSman relief, and it will be $1,500. In fact, this year is my first year where I don't have any NS activity because I am already considered in MINDEF reserve, or we call it MR, ever since April this year, 2025. So my last NS activity was last year. I completed my 7 high key income trainings and 10 ORN this year. So I have fully fulfilled my NS obligations, even though I'm still like in my 30s. But since I already MR this year, I had 0 NS activity. And according to MINDEF website, even if you have completed your NS liability as a MINDEF reserve personnel, you will still continue to get that $1,500. So very good lah. Now it's like passive income tax relief. I don't need to go and attend already. But if you have performed any NS activity, like you went for ICT or you went for IPPT, okay, you look at the list, you are qualified, then you can get from $3,000 to $5,000 of NSman tax relief according to what kind of rank you are. And this is automatically applied. So you don't have to go and apply manually or what. MINDEF will submit the information to IRAS. So very good. Okay, the next one is parents relief. And this year, I'm getting $5,500. Parents relief is something very different because if this is the first time that you qualify, you will need to go and manually apply. And it's only applicable if your parents are 55 years old and above, and they have an annual income of not more than $8,000, meaning they are either retired or they are very low income worker. The other criteria is that they have to be physically living in Singapore, and lastly, you need to have incurred at least $2,000 or more in supporting their lifestyle. So for my context, my mom is already retired, so she does not have any income. My dad is still working, so I will only qualify for one parent relief. So each parent can have one relief. And the amount of parent relief really depends on whether you are staying with them or not. So are you a single household living under the same roof? The other factor is whether your parents are persons with disabilities, because that will mean a higher parent relief. So if you look at this table from IRAS, it will range from $5,500 to $14,000 per dependent, up to 2 parents. Therefore, if you look at my own context, one parent without disability and living away from me, okay, not the same household. So I will get the lowest $5,500. But there's a very important rule known as the sharing of relief claims, because if you were to compare spouse relief versus parents relief, spouse relief is for those couples who want to claim tax relief on the unemployed spouse. For example, husband is working, wife is not working. Husband wants to claim the spouse relief to deduct around $2,000. But if you look at it, parents relief may have a bigger quantum starting from $5,500. So you need to see which one has a bigger tax advantage. So you let the one with the bigger tax savings apply for it, whether for parents relief or spouse relief. Also, the parents relief can be shared among children. Okay, if you have multiple children, you can own self go and decide the allocation split between different children. For example, if the elder child has more income tax and the younger child maybe don't even have any income yet, so it's better to just let the elder child take the maximum tax relief. So you will allocate this parents relief according to your own situation. No one can really advise you. And first time really need to apply. Okay, subsequent years, if you have never make a change, it will continue on. Also, if you have moved out of the family or there's a change in circumstances, or your parents got struck with disability, then you will need to manually go and change it. Next relief is called the SRS relief. SRS stands for Supplementary Retirement Scheme, which is a voluntary retirement savings scheme for all Singaporeans, PRs, and even foreigners. How SRS works is that only 50% of SRS withdrawals are taxable at retirement age, and it's like a deferred income tax scheme. So your SRS contributions will go into a SRS bank account. Then after that, you can then decide what you want to do with this funds. You can use it to invest, and most likely you should use it to invest, because for myself, I use my SRS to invest through Poem's platform in a unit trust called the Amandi Prime USA Fund. And if you don't invest your SRS, it will only give you 0.05% interest. So I already done up a previous video on SRS, the full guide. That one you can refer to it. It's a live stream recorded. And the reason why I contribute SRS is because I can really see the long-term benefits. But this year, I only put a very small sum of $456. Yes, very little. Because my tax optimization is already achieved through other means. So I don't need to maximize my SRS for further tax contributions anymore. But it may not be the same for you. Okay, so every circumstances, every person's situation is really different. Let's take a look at some other tax reliefs that are not applicable to me. If we look at the list, we have spouse relief, foreign domestic worker, grandparent caregiver, sibling, working mother-child relief, qualifying child relief, life insurance, and course fees. So if you want the details of this tax relief, make sure you refer to the IRAS income tax guideline. Okay, it will really show you examples, explanations, so you can better understand whether all these tax reliefs apply to you. And if we take a calculation of my entire non-CPF tax relief, it will be the following: $1,000 earned income relief, $1,500 NSman relief, $5,500 parents relief, $456 SRS relief, a total of $8,456. And moving on, let's take a look at CPF tax reliefs, because it will be split to voluntary contributions and mandatory contributions. Let's talk about mandatory contributions first. Mainly coming from your job, your salary, and whatever income that you have. And it is totally based on salary ceilings and CPF contributions rate. So for those of you who are 55 and below like myself, it will be 20% contributed by the employee, which is myself. And the current 2025 CPF salary ceiling is 7,400, but the monthly salary that I pay to myself is way below the ceiling. So my total mandatory CPF contributions eligible for tax relief is only $13,370. Moving on to the voluntary contributions, or commonly known as CPF top-ups. There are two ways you can top up. Number one is the retirement sum top-up scheme, that is to your special account. And the other one is called the voluntary contributions to MediSave, VCMA, where you top up to your MediSave account. All these are considered cash top-ups out of your pocket and from your own will. Okay, it is not mandatory. And please understand the fact that even though your MediSave account has reached the basic healthcare sum, which is supposed to be the cap of every year, there are always opportunities for you to top up back to your MediSave account, like the following. Number one, at the start of the year, when the basic healthcare sum for the new year has been raised, so there is a gap that you can top up. Number two, when insurance premiums like integrated shield plans, CareShield Life, all these premiums, when they are deducted from the MA, there is a gap, so you can go and top up again. And that also includes your family insurance premiums, where you use your own MediSave account to pay for their premiums. You can then top up your own MediSave account as well. So there are always opportunities for you to do it. And for my own VCMA this year, 2025, I contributed $5,050 out of that $8,000 cap. And I want to be very clear that I cannot do any more retirement sum top up to the special account ever since I hit the full retirement sum in the 1st of January 2022. So that has been close to 4 years now. hitting the FRS, so I can no longer do RSTU every year from now on. Okay, but that's not the problem. So if I look back at the total of my CPF tax relief, it's a total of $13,370 at $5,030, giving you $18,400. So my total CPF tax relief will be $8,456 at $18,400, giving you $26,856. Also, you may wonder, why am I paying myself a lower salary? So the truth is that not all my business income is paid through salary. Some of it is paid through other ways like company dividends. So I issue dividends to myself as a business owner and shareholder. This is mainly for tax optimization purposes because there's a difference between corporate tax and individual income tax. And for highly paid self-employed persons, I strongly recommend you to dive deeper into setting up a company and then paying yourself, because there will be various tax benefits that the government can help you with. And the government is always encouraging people to start up business, right? To incorporate a company. So we will go through all these details in the Shift by SoloBits, which is my second business and education and consultancy company, to help you lower your effective income tax. And I'm very sure that if you are starting our company, you are really confused at all these tax rules and how to pay yourself. So we already have a free preview. You can go and watch it, and then if you're really interested, we can work together. Once again, I want to highlight as an ex-chartered accountant that tax avoidance is totally fine, okay? If you use legal ways to minimize your taxes through all the tax incentive schemes like I just mentioned in this video, it is perfectly legal. But what is not legal is tax evasion. That means if you under-declare your income or you over-declare your expenses, leading to a lower taxable income, then that is illegal. Also, I want to be clear that this video has no sponsor, but I do it every year to really educate people about tax planning, because nobody wants to pay more tax than what is required, right? So if you really want to support, I really appreciate you can help me click this IBQR link or just help me scan the IBQR code here. It will really help the channel a lot. Thank you. So what I really feel about tax planning strategy, especially for adults who are stepping into the corporate world, is that it is an essential skill that everyone should learn, but they may not have been exposed it in school, in university. And it's a fundamental part of personal finance that you should really look at. That's when you start being a real adult, paying your own taxes. And you really need to stay compliant with all the regulations. So by combining CPF and non-CPF tax relief strategies, I optimize my own tax strategy, but that only fits my situation. Remember that everyone's situation is totally different, and especially if you have a family, if you have a kid, or you hire a helper and all that, you have very different tax relief strategies from mine. So I hope that it can help inspire or start the fire in you to start learning more about tax strategy. And if you're still confused about all this, please ask your questions in the comment section. Hopefully someone can help you out. And if you want to know of the 5 finance or money things that you cannot miss, especially before the end of this year, then I can refer you to a previous video right here.